Imagine buying a $100 bill for $60. Sounds illegal, right? Nope, that's value investing. The rich have been doing it for decades, and the rest of us are just catching on. Want to know how Warren Buffett became a billionaire? He didn't day trade meme stocks. He mastered this one powerful strategy. And guess what? You can too. Let's uncover the secret behind value investing and why it's not just smart, it's how wealth is really built. Let's break it down. Value investing is the art of buying stocks for less than they're actually worth. Think of it as shopping for deals. But instead of shoes or TVs, you're bargain hunting for businesses. The goal? Buy low, sell high. But with one twist, you don't sell just because the price goes up. You sell when the value no longer justifies holding it. Sounds simple? It is. But only if you understand one critical thing. Intrinsic value. This is the holy grail of value investing. Intrinsic value is what a company is really worth, not what the stock market says it is. Wall Street throws prices around like confetti. But smart investors, the Buffets, the Greenblatts, the Christophers, they don't care about noise. They care about numbers. To find intrinsic value, they look at earnings, cash flow, assets, liabilities, and future growth potential. If the stock is trading below its intrinsic value, that's your discount. That's your opportunity. That's your $100 bill for $60. So how do you find these golden tickets? Start by screening for undervalued stocks. You're hunting for low price to earnings, PE ratios, high return on equity, ROE, healthy free cash flow, and strong balance sheets. You want a business that's profitable, efficient, and not drowning in debt, but somehow still ignored by the hype machine. Think, boring industries, unsexy names, stuff people underestimate. You're not investing in buzz. You're investing in business fundamentals. But wait, isn't the market efficient? Not always. And that's where the secret sauce is. The market is often driven by emotion, fear, greed, panic, hype. Sound familiar? Value investors use those emotions to their advantage. When the market overreacts, say a company misses earnings by a penny and the stock tanks 15%, that's your window. If the long-term fundamentals are solid, that dip is a discount. In short, the market misprices stuff all the time. Value investing is simply knowing when something's on sale and having the guts to grab it. Let's talk about margin of safety. This is the buffer between what you pay and what something is worth. Think of it as buying a car worth $10,000 for $6,000. Even if you're wrong about a few things, you've got room to be wrong and still come out ahead. Ben Graham, the godfather of value investing, said it best: the essence of investment management is the management of risk, not the management of returns. That's what makes value investing so powerful. It's not about chasing crazy highs. It's about building wealth quietly, consistently, and intelligently. So what kind of companies do value investors actually buy? Forget moonshots and vaporware. Think established brands with durable advantages, companies with consistent profits, even in bad years, stocks that are unloved but fundamentally strong. In other words, the tortoises, not the hares. Warren Buffett calls these wonderful companies at a fair price. Others call them cash cows. We call them opportunities waiting to be recognized. But here's the catch. Value investing isn't sexy. It takes patience, discipline, the ability to sit still while everyone else is panicking or partying. You won't double your money overnight. You won't be the star of our Wall Street bets. But you'll have something better, real wealth that lasts. Let's recap the secret to value investing. 1. Understand intrinsic value. Dig into the numbers. 2. Buy undervalued companies, ones the market has temporarily mispriced. 3. Insist on a margin of safety. Protect yourself from the unknown. 4. Ignore the noise. Focus on the business, not the buzz. 5. Be patient. Real gains take time. This strategy made Buffett a billionaire. It made countless others financially free. And it can work for you if you play the long game and stay rational when others lose their minds. That's the secret, and it's hiding in plain sight.